October 27, 2025. The world wakes up to a day that will be etched in financial history. As the sun rises, a sense of unease hangs in the air, foreshadowing the chaos about to unfold. The world's financial markets are in freefall, an early Halloween horror show. Panic spreads across trading floors as investors scramble to make sense of the sudden collapse. The Dow plunges over 1,000 points at the open, circuit breakers tripping, screens awash in red. Alarms blare as automated systems struggle to keep up with the relentless selling. This isn't just a Wall Street panic, it's a global contagion. From Asia to Europe, markets tumble in a domino effect, each fall triggering the next. London, Frankfurt, Tokyo, all nosedive in unison. The world's financial capitals are gripped by fear, their streets filled with anxious crowds and worried investors. Traders look devastated, the VIX spikes, and news anchors drop words like meltdown and unprecedented. The sense of crisis is palpable, with uncertainty spreading faster than the news itself. The trigger? Aggressive new U.S. tariffs. Overnight, sweeping trade barriers have been announced, sending shockwaves through the interconnected global economy. But the response is a synchronized global market implosion. No region is spared as investors rush to pull out, fearing what might come next. Countries we once called allies are now financial adversaries, wielding economic weapons instead of tanks. Diplomatic ties fray as leaders blame each other for the turmoil. Treasury bonds, currency reserves, and gold become the new arsenal. Central banks scramble to defend their economies, hoarding assets and tightening controls. The global financial system, the plumbing that keeps money flowing, is suddenly a battlefield. Every connection is under strain, every transaction a potential flashpoint. And the main target? The United States. As the architect of the new tariffs, America finds itself in the crosshairs of global retaliation. This isn't just about stocks, it's an economic brawl on the world stage. Boardrooms and parliaments become war rooms, strategizing for survival in a new era of uncertainty. Welcome to the new Cold War, fought not with spies, but with bond market terminals. The weapons are financial, the stakes are global, and the outcome is anything but certain. The world's financial order is being rewritten in real time. Every headline, every trade, every decision is shaping a new global landscape. And America is at the center of the storm. As the winds of change howl through the canyons of Wall Street, the world watches, waiting to see what will emerge from the chaos. How did we get here? It started with a bold move from Washington. The U.S. imposed sweeping tariffs, 40% on steel, 30% on foreign cars and parts. The goal? Force companies and consumers to buy American. Economic patriotism, enforced with a sledgehammer. Allies like Canada and Brazil were hit just as hard as China. The administration gambled that America's market was too important to lose. But instead of backing down, trading partners saw this as economic aggression. They didn't just retaliate with tariffs, they went for America's financial jugular. The world's response targeted the foundation of U.S. power, its ability to borrow cheaply. The U.S. threw a grenade into global trade, expecting to walk away unscathed. Instead, the backlash was swift and devastating. The tariff gamble failed, and the consequences were about to get real. The story shifts from a simple trade spat to a high-stakes financial thriller where the battleground is no longer just goods and tariffs, but the very foundation of global finance. After the tariffs, foreign central banks, China, Canada, Brazil, quietly start selling U.S. Treasury bonds, a move that sends ripples through the world's financial markets. These bonds, once considered the world's safest asset and a symbol of American economic might, are now being used as a weapon in a silent war. As trillions in U.S. debt flood the market, bond prices tumble and interest rates spike, sending shockwaves through the global economy. The U.S. government's borrowing costs soar, blowing a massive hole in the federal budget and forcing officials to scramble for solutions. This isn't a press conference or a public declaration, it's a silent, devastating counterattack, unfolding behind closed doors and computer screens. The U.S. runs on borrowed money. If rates rise, everything from mortgages to car loans to groceries gets more expensive for everyday Americans, squeezing families and businesses alike. China leads the charge, but soon other nations join in, turning what was once America's financial strength into a dangerous vulnerability that the world can exploit. The move is subtle but brutal, a direct strike at the heart of U.S. economic power, shaking Wall Street's confidence and rattling investors worldwide. The world's creditors are no longer willing to play by America's rules, signaling a dramatic shift in the balance of global financial power. The tariffs backfire, inflicting pain on the very government that imposed them, as economic pressure mounts from all sides. The global financial system is now a battlefield, with every nation watching and waiting to see who will blink first. And for the first time in decades, the U.S. finds itself suddenly on the defensive, scrambling to protect its economic interests. The era of easy money is over, and a new, uncertain chapter in global finance has begun. As countries dump U.S. bonds, where does the money go? Gold. Gold prices explode past $3,500 an ounce in a frenzy. This isn't retail panic, it's central banks shifting reserves. The message: U.S. treasuries are no longer the ultimate safe haven. Gold, immune to politics and printing presses, becomes the new fortress. Central banks build up gold reserves, signaling a loss of faith in the dollar. Trading halts hit gold exchanges. Dealers are overwhelmed by sovereign demand. This is a strategic realignment, not just a profit play. Countries like China and Brazil are building financial fortresses, brick by golden brick. The world is fracturing into competing economic blocks, each with its own reserve asset. The US-centric system is being openly challenged. Gold is back at the center of global finance. The shift is seismic, and it's just beginning. Rising treasury yields aren't just numbers, they hit home. Mortgage rates surge as bond yields spike. Home buyers are priced out. The housing market stalls, a direct hit to the US economy. Car loans get pricier, just as tariffs make auto production more expensive. Monthly payments balloon, new cars slip out of reach. The policy meant to help US industry delivers a double blow: higher costs, lower demand. Even credit card debt gets more expensive as rates rise. Businesses pull back on investment, facing higher borrowing costs. Wall Street's crisis becomes Main Street's pain. For lease signs pop up, the financial war is now an economic one. The retaliation by China, Canada, and Brazil is felt in every American wallet. The fallout is real, immediate, and personal. The global financial war has come home, and ordinary Americans are paying the price. Canada, usually America's polite neighbor, turns adversary. US tariffs threaten Canada's economy, so Ottawa fights back, hard. Canada sells US treasuries, making sure the world knows. The message: if America's closest ally is losing faith, others should too. Canada fast-tracks trade deals with Europe and Asia, marketing itself as a stable alternative. The strategy: undermine US financial stability, reroute global trade. The quiet ally becomes a strategic adversary. Canada's central bank and trade policy become powerful weapons. The world watches as the Canadian moose reveals its antlers, aimed at Washington. Even the friendliest neighbors have a breaking point, and Canada just crossed it. China's response is a masterclass in economic warfare. Instead of dumping all US bonds at once, China sells steadily, inflicting slow, grinding pain. US interest rates spike and stay high, damaging the economy long-term. Simultaneously, China pushes the yuan as a global alternative, launching a gold-backed digital currency. Belt and Road partners are encouraged to trade in yuan, not dollars. The message: there's a new system backed by real assets, not US politics. The dollar's dominance is directly challenged. The tariffs gave China the perfect excuse to deploy its most powerful weapons. By selling US debt and promoting the yuan, China aims to reshape global finance. The dragon is no longer just hoarding treasure. It's projecting power. The US picked a fight. China is changing the rules. The global financial order is shifting, and China is leading the charge. Brazil, often underestimated, plays a critical role. Hit by US steel tariffs, Brazil pivots fast, strengthening ties with China and signing huge commodity deals. They price exports in yuan and other currencies, bypassing the dollar. Brazil's central bank sells US treasuries and doubles down on gold. The government nationalizes gold mining, funneling wealth into state reserves. Brazil's playbook: secure trade with non-US partners, reduce dollar dependence, and convert resources into hard assets. It's resource nationalism in action. Brazil shows emerging economies how to resist US pressure. They're not just selling bonds, they're building a new economic foundation. Soybeans and gold, not dollars and debt, are the new pillars. Brazil's strategy is bold, and others are watching. The global balance of power is shifting, fast. What's the verdict after this chaos? The world is watching closely and the financial headlines are more dramatic than ever. The global economy is shifting and the aftershocks are being felt everywhere. America's financial vulnerability is exposed. The cracks in the system are no longer hidden, they're on full display for all to see, shaking confidence in the dollar's long-standing dominance. The dollar's reserve status isn't a birthright, it's a privilege, and the world is revoking it. Countries are diversifying their reserves, seeking alternatives to reduce their dependence on the greenback. The coordinated sell-off of treasuries is a shot across the bow. It's a warning sign that global trust in U.S. debt is eroding, and that faith in the dollar is no longer absolute. Cheap borrowing is over, higher rates are the new normal. This means higher costs for mortgages, loans, and business investments, impacting everyday Americans and companies alike. The U.S. government faces soaring interest costs, crowding out spending at home. More tax dollars are going to pay interest, leaving less for infrastructure, education, and social programs. Tariffs meant to strengthen America have triggered a backlash that threatens its economy. Global supply chains are disrupted, and American industries are feeling the pain of retaliatory measures. The world is building a parallel financial system, no longer dollar-dependent. New alliances and payment networks are emerging, challenging the dollar's monopoly on global trade. The dollar won't collapse overnight, but its reign is ending. The process is gradual, but the direction is clear. America's financial supremacy is being questioned. We're entering a multipolar currency world, yuan, euro, and gold all vying for influence. The future of money is more competitive, and no single currency will dominate as before. The era of U.S. economic hegemony is fading, other nations are rising, and the balance of power is shifting toward a more diverse and unpredictable global economy. Could gold replace treasuries as the world's safe asset? Investors are reconsidering old certainties, and gold's appeal as a store of value is growing stronger. For the first time in decades, the question is real. The debate is heating up in boardrooms and trading floors worldwide as the financial world rethinks its foundations. The great dethroning of King Dollar may have begun. The symbols of American financial power are being challenged, and the outcome is far from certain. And America's financial future has never looked more uncertain. The world is entering uncharted territory, and the next chapter in global finance is just beginning.